Welcome to our channel Ayakar Kankar. In this video, we are going to discuss how to save tax on long-term capital gains arising out of sale on house property. This can be done in two ways: by making investments under Section 54 through in house property and under Section 54 EC in investments in specified units. Section 54. It can be done via purchase of a new house 1 year before or within 2 years from the date of sale of long-term capital asset, or construct a new house within 3 years from the date of sale of long-term capital asset. Conditions. The exemption can be claimed for only one house. The maximum limit is 10 crores. The benefit is only available to taxpayers who do not own more than one house. The property should be purchased only in India. The property cannot be sold for 3 years after the date of purchase or completion of construction. The amount can be deposited in capital gains account scheme until the purchase of property but before filing of returns. Claiming deduction under Section 54. The least of the following is claimed as deduction: long-term capital gains, where the amount invested in new property exceeds the net sale consideration, the entire capital gains. Where the amount invested in new property is less than the net sale consideration, then long-term capital gains into amount invested by net sale consideration. 10 crores. Let's assume you have sold a house property for rupees 50 lakhs. The brokerage expenses is 1 lakh and the cost of acquisition is 30 lakhs. In scenario 1, you have purchased an apartment for 40 lakhs, and in scenario 2, you have purchased an apartment for 60 lakhs. The exemption will be as follows. Sale consideration is 50 lakhs less expenses on transfer, that is brokerage expenses is 1 lakh, and the net sale consideration comes to 49 lakhs. In both the cases, the cost of acquisition is taken as 30 lakhs and the long-term capital gain is 19 lakhs under both the scenarios. However, while claiming exemption under Section 54, where the house property purchased is 40 lakhs, 19 lakhs into 40 lakhs by 49 lakhs amounting to 15 lakhs 51,020 is claimed as exemption. Therefore, the long-term capital gain comes to 3,48,980. Under the second scenario, since 60 lakhs house property is being purchased, the entire capital gains is claimed as exemption and the tax liability is nil. (54) EC. The taxpayer should invest in long-term specified assets notified by the government. The asset being sold should be land or building or both. The maximum limit is 50 lakhs for claiming exemption. The exemption will be withdrawn if the bonds are sold within 5 years. The exemption will be withdrawn if a loan is taken against these bonds as securities. The bonds should be purchased within 6 months from the date of transfer. Claiming deduction under Section 54 EC. Amount invested in specified units, 50 lakhs, long-term capital gains. The least of the above is allowed as deduction. Subscribe to our channel Ayakar Kankar for further updates and mail us for any tax consultation at ayakarkankar@gmail.com. Thank you.